following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly choice for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call the Options Insider Radio Network. And I'm always saying that it's ever expanding. Well, that is true yet again. I've been promising you guys for quite a while a more, let's say, granular, a more useful futures options trading show for you guys out there. We just launched it finally yesterday, so you can find it on our site. It is called the Futures Options Roundtable. Of course, you can find it in all of your favorite podcast providers of choice. iTunes should be up, and Stitcher very shortly. It's launching on all the other platforms as well. Hopefully, in the next couple of days, you should be able to find it everywhere you find podcasts. If you can't, let us know. We'll get it up in your provider of choice and help them do so. So there you are. If you're getting into the futures options realm and you're intrigued by that stuff, then this is indeed the program for you. And, of course, joining me on this program, I should say, today, the old Option Block All-Star panel. We have another great lineup in store for you. Starting off with the man probably closest in terms of proximity. I think if I drew a straight line from the Options Insider HQ all the way to the Option Pit World HQ, it would cut right through the OX HQ. So there we go. Alex gets pride of place. You know him, you love him as the Viceroy. He is none other than Alex Jacobson from Options Express. Mr. Alex, welcome back to the show, sir.
Hey, Mark. Good to be back. And today was Facebook Day. All Facebook all the time today. Facebook took out 50 today and did an enormous amount of call option business here.
Facebook hitting 50. It seems like it wasn't. I know it wasn't that long ago on this show. We were debating, I think someone wrote in about writing puts on the 17 strike, and we kind of hemmed and hawed here on this show about whether that was a good idea. And here we are at 50, not very long later. So shows you how the worm has turned out there in Facebook land. Apparently,
yeah, as soon as any of us on the show think we haven't figured out, the thing turns.
Apparently, there's suddenly money in mobile out there. Who knew? First, the narrative was there's no money in mobile. They're wasting their time. And now, apparently, there's money to be had in mobile. So, c'est la vie. That's a good news because we're getting into mobile soon as well. So, I'll follow Facebook's lead quite happily on that front. All right. And if we keep extending that line out past the Option Pit World HQ, and then we circle around a little bit and do a few zigzags and some figure eights, we can make it eventually all the way out to scenic St. Charles, Illinois, where we are currently joined by the man known as Uncle Mike. He is Mr. Mike Tusaw from RCM Asset Management. Uncle Mike, welcome back to the show, sir.
Always happy to be here, especially on a Thursday.
Why a Thursday? What makes Thursday so exciting?
I don't know. It just kind of sounded cool.
Actually, I know what makes it exciting. Of course, it's Thursday night trading, the big night for you guys over there at RCM when you get to have the big webinar extravaganzas when the webinar train pulls into town.
We are excited, I have to say.
You sound dripping with enthusiasm, sir. I could just feel it.
If I were any more excited, I'd be doing cartwheels right now. I'd rip my headset off, I'd do some cartwheels, and I'd probably hurt myself. So I got to calm down now.
Hello, everybody. It is a beautiful day here. The world is yet again my oyster. It's great to be back on the Option Insider, and 2 for 2. 2 out of 2 this week. I'm hoping to try and be here more frequently, as I just if I don't get my longo time, I'm just a sad man.
I can see that. I can certainly see that over there. I've heard some reports that when you're not on the show for a while, it certainly does linger. Particularly with Vol Views on hiatus, you're getting less and less of me, so you need to have your intake upped, definitely. All
exactly.
Right. Before we go farther down that road, we're going to keep on rolling right on into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the program where we break down the trading, the action that was going on in the old options market today. And from a broad market perspective, it was a little bit of an action-packed day. We saw most of the day was relatively unshed, and towards the end of the day, we saw the rally get a little bit more steam, a little bit more oomph. S&P closing up nearly 0.5% to, or about 6 handles to 1698. Dow about the same level, percentage-wise, up to about 15,328. Good old NASDAQ leading the charge to the north, up about 26 handles to 3787. Good old VIX cash essentially unched on the day. Not much going on from a VIX cash perspective. But otherwise, a relatively interesting day. Maybe we'll start with what you just talked about there, Alex. Facebook, it's been all over the place. It's kind of in many ways the other name after Apple and a few others that really gets a lot of interest in the retail options trading community. Breaking through 50. I don't want you to preview too much of your Xpress Block, but what was some of the activity you saw? What were some of the questions and the calls that were coming into OX today regarding Facebook?
It was just constant Facebook all day. So, and the interesting thing, it was predominantly bullish flow. When I talked to the desk guys, which is kind of leaning over the cube, and I asked them 3 questions. I say, how busy was it today, and what was lighting up the phones? And it was like, I hate to call it a Three Stooges movie, but I got 3 Facebooks all at once. So Facebook taking out 50. Tesla bouncing off the 190 area. Just stuff that, no one saw coming a couple months back.
Mm-hmm.
Certainly not. Yeah, you're right. Either of those, I don't think anyone really saw coming. Tesla, again, we were joking about selling the 20 puts not too long ago out there, pushing 190. Facebook rallying above 150. Rallying above the 50 handle. Mark, I'd imagine a lot of your clients are suddenly taking a second look at Facebook right now as well.
Oh yeah, for sure. I mean, I think I've been right as this was taking off. Facebook now is the new Apple in terms of the public lust. That and Tesla. I mean, all the Momo traders that were all about trading Apple, and they're going to put in their kids' college fund and all that. They're all trading Facebook and Tesla right now. And if you look at the option structure of both of them, they're getting that crazy call skew that we saw on Apple when it was running up to 670. So, listen, I'm not saying Facebook's not a fair bet at 50. But I would say that a big run beyond here, I'd start to get real nervous about that vol and that options. When you get that combo of vol running and the underlying running at the same time, that's always a slightly scary combo, in my opinion.
It is scary, but it also is interesting. We've talked many times about the zealots bidding up the Apple call skew. Starting to see hairs of that and signs of that out here in Facebook as well. You're right, is these calls are certainly getting a little bit of more juice to them than you may expect. And that always sets up some interesting opportunities, of course, ratios for some of our more daring listeners, but even just simple verticals, taking advantage of that skew to get levels that you otherwise would be unheard of in a name like this.
Yeah.
I was going to say, you also had a lot of commentary today that even if Washington gets totally dysfunctional and, closes things down and continues to kind of arm wrestle over this, you had commentary that two areas are going to be immune. One is mobile and the other is biotech. If Facebook is kind of the weather vane of mobile, it clearly was resilient today. But biotech was up across the board today, too. And I mean, big moves. But there was a lot of commentary relating to those two being immune.
All right. Yeah. And Alex, speaking of commentary and Washington wagging their tail and the pundits, going off about all these different stuff. I was at a conference today in Chicago, and the SEC chairwoman was there pontificating about stronger penalties for firms that go out of line, like JP Morgan and others like that, who, of course, are in the process of negotiating their fine right now for that big whale trade. That same conference, the JP Morgan, some of their directors from their board were there, and they essentially said that their forays into commodities was a huge mistake for them. They did kind of demur a little bit and say that if a client comes up to them like an Exxon and looks for them for constructing some sort of hedging product, they will still be in that business, but I guess other more speculative type businesses, that's what they were referring to as a mistake. And so they're not exiting commodities altogether, but they did make it sound like they, at least for the near term, are a bit chastened and want to withdraw from that business altogether. Of course, one of the reasons I go to the events like this was the Council of Institutional Investors, is I love to gauge the sentiment, particularly in these large institutional asset manager crowds, for things like we talk about on this show, which is aimed at a retail audience, but I think that audience could benefit from as well, which are simple things like hedging strategies and managing risk, managing tail risk, generating income with options, things like that. So I always go to these kind of conferences, which can keep my ear to the ground and see what I hear. And as I expected, a lot of the pension funds and other things, it was mostly a conference of lawyers talking about compliance issues and risk and things like that, which I don't think in this day and age really surprise anyone. But I was looking for some of the CIOs, some of the actual quote-unquote investors at the Council of Institutional Investors, and I found a few, and it was kind of interesting listening to some of these pension fund guys talk. Most of them tend to still lump options, if they even talk to them, into some weird little alternatives ghetto along with private equity, and one guy compared them to essentially fine art, so it wasn't exactly a large portion of their portfolio. But one guy was interesting. He was on an investment board out of Wisconsin running their pension funds up there, and he was talking about hedging with puts, writing calls, writing treasury futures, and some interesting spreads against equity futures. They seemed far more sophisticated than some of the other guys that were around there talking about the same products. So there is some hope. It makes me want to move all my assets to Wisconsin from a retirement perspective. So there is some hope. It wasn't anywhere near the same wasteland or black hole that something like a Morningstar Advisor Conference would be from an options perspective. So apparently there is some hope in the institutional landscape that the funds are catching on and they're starting to embrace this more and more. Of course, it's still very much the red-headed stepchild of an event like this, but still worth going and just to kind of check out and gauge the sentiment for this kind of stuff. I think, quite frankly, most of the stuff we talk about on even a show like this would be above the pay grades of most of these guys there who are managing billions of dollars. A scary prospect, but nonetheless true. Uncle Mike, of course, we were talking about Facebook kind of usurping Apple earlier, but still some action in your neck of the woods. What caught your eye in today's activity, sir?
Not a lot of action today. Apple went down a little bit yesterday, came up a little bit today. And it's kind of like, for Apple, that's kind of like watching paint dry. We had the big run-up earlier this week, and so I got out of the credit spread section of the hedge. So right now we're just long the 420 puts for the time being, and I'm not trying to get too cute going into the latest Armageddon announcement or the latest Armageddon deal that Congress has going over the course of the next few days. A couple other things that I'm looking at right now. Gold's been fairly flat. Silver's been fairly flat. Treasuries have caught a little bit of a bid since we announced recently that last week that the printing press is still open. But for now, really not too much action in my neck of the woods with what I'm doing.
Speaking of GLD, there's been some interesting things I discovered just playing around some of these tools we were talking about in the last show about GLD. I think maybe we'll save it for the Xpress Block because it's probably better suited to that area. But some interesting things that go hand in hand with trading GLD that you may not expect, or maybe you do. Maybe you have a greater insight into the GLD land. But they came as a bit of a surprise to me. And I think with that, we're going to keep on rolling right on into very much the surprise segment of the show, which is, of course, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the program where we break down some of the interesting and bizarre and sometimes just very weird activity that we spotlight here. And, of course, if you want to read more of these alerts or the other ones we don't have time to highlight here on the show, surf on over to theoptionsinsider.com. Click on the Unusual Activity tab. You'll find all of these alerts and much more, so you can read unusual activity until your heart's content. And kicking things off today is a somewhat regular name. We don't talk about them that often, but they have been on the Odd Block in the past. They kind of pop up every now and then there's a little bit of movement, a little bit of vol out there. I'm talking about Juniper Networks, ticker symbol JNPR, closing today about unched, $20.15, up about a nickel. Not too much going on price-wise out there, but from an options perspective, doing some business. They were trading. Well, they average about 4,000 contracts a day, doing nearly 9,000 today. So pretty aggressive overall day for Juniper. The day started off, interestingly enough, paper coming in and piling into the OC19s. That's what we profiled on the site earlier in the session. They traded about 1,100 of those. They paper bought them for prices around $1.60 or so, with ADV of about 3,000 contracts on that strike. The option open interest on that strike, about 3,000 contracts. Could be closing. Looks like it might indeed be opening bullish paper. Of course, as the day went on, we saw more paper flocking in to Juniper on the OC20s, and these went up on a variety of prices. It looks like around 65 to 70 cents, nearly 6,000 times, 5,700 contracts. We don't have that part in our alert because we put it up some early in the day, but it looks like a lot of that was opening buys as well. Could be some ratios going off against those 19s as well, but some pretty sized paper going up on those OC20s. Mr. Sebastian, have you had a chance to delve into the activity, the goings-on out there in Juniper Networks today?
Well, we're seeing kind of all these networkers and the chip stocks. We're seeing all kinds of activity kind of across the board. You recall the last session we were talking about NVIDIA and AMAT. So my guess is with what appears to be kind of a little uptick in merger and acquisition plays with BlackBerry and Applied Materials, that you're seeing people look at technology and look at the overall market and want to go long. But a lot of the put buying to me looks like traders trying to hedge long positions. That's what I've been getting.
Yeah, this could be some of the tailwinds of BlackBerry. An interesting name. I didn't really bring them up on the trading block, but they've been moving kind of oddly as well of late. I don't have really a specific alert in mind for them because I had kind of taken them off the radar because they have a corporate action, of course, and it's supposed to settle out around $9. The stock has since drifted down nearly $1 to $7.95. So we're seeing some volatility, and we're seeing some options volume doing about 2x their ADV, about 260,000 contracts today, in a name that should be relatively quiet. They should have their price relatively set. So apparently there's still some flux there in that deal out in BlackBerry. And you're right, maybe that is rippling out into some of these other names and putting them not so much in play, but maybe generating some more interest and some activity out there.
Yeah. It just, all of these look kind of interesting.
That's what we're here for. We're in the business of interesting. Speaking of interesting, this next one, I guess it somewhat qualifies as interesting. We're talking about some activity here in EWA. That is, of course, the iShares Australia Index, closing today $25.80, up about 20 cents. This is the name that does about 1,600 contracts a day, doing about that much again today, maybe about 2,000. What we saw was essentially one big trade coming in, blasting out. A trader blasted out about 1,500 of the NOV 25 puts for around 35 cents. And what was interesting about that, is a couple of reasons. First off, even though he traded and sold a bunch of these on open interest of just 900 contracts, so this is all opening paper, he struggled to get done. It looks like he had to do it on multiple exchanges as he just couldn't find the liquidity to even get 1,500 contracts off. Again, that is the ADV for this name, so that isn't entirely surprising, and it shows you some of the struggles you have when you're trading these less than liquid names. But also, we saw vol creeping up in this name afterwards, which is interesting. These puts closed 40 at 45 after this guy blasted out 1,500 of them on a day when the underlying is rallying as well. So interesting stuff going on here for an opening sale here out here in EWA. It looks like, if I had to guess, this is probably just someone either looking to get long at this strike or perhaps just setting up for further line in the sand type put sale trades that we like to highlight so often here on the old odd block. Mr. Sebastian, I know this isn't Chico's, but have you been watching the Australia Index of late?
To some degree, it's not one that's on like the forefront right now. I mean, it's certainly not one of the all these foreign countries have been kind of interesting, but this has not been kind of one of the major players that I've been paying as much attention to, unfortunately. So, but it certainly is an interesting country. I enjoy Australia, but no, not paying too much attention to
you love you some Fosters. I know you have cans of Fosters all over there, the Option Pit World HQ, littered with empty cans of Fosters.
Oh, well, yeah, of course.
I don't know if you know this, but that is Australian for beer.
Yes, it is. How did you know?
All right, before we go too deep down the Fosters well, we're going to dive into our next name here on the old odd block. This is Hertz, of course, ticker symbol HTZ, closing today, taking it on the chin a bit today out there in Hertz land, closing at $21.63, down about $4 or 16% on the day. Not surprisingly, options lighting up the tape out there in Hertz today. They usually do about 5,000 contracts, doing 86,000 today, so just an aggressive amount of options going on. Of course, Hertz came out and revised their full year guidance today, and when that happens and they do it early, chances are it's not going to be good, and looks like that was indeed the case as the stock getting clipped. But what we see with these types of a day like this, you usually see people scrambling in to buy puts on the way down and get some bearish bets off, take advantage of the liquidity and options, scoop up some resting offers in the book to get some cheap and free downside as the stock's just in free fall. And we certainly saw some of that today. But what was interesting, too, is we saw a lot of actually the opposite, too. People coming in looking to scoop calls to try to play a bounce. And pretty aggressively, we saw a lot of the OCT23s going up today earlier in the session, about 3,000 going up on a wide variety of prices, obviously, because Hertz was swinging so wildly. Prices from 40 to around 90 cents. So with open interest, just 175 contracts. This is all opening paper. And it looks like people are setting up to play a bit of a bounce out here in Hertz. We also saw nearly 6,000 of the OCT22s going up. But this is an interesting paper, and not at all what you'd expect. This preponderance of people coming in and loading up on calls, apparently thinking that this may indeed be a decent level here at Hertz. Looking at the chart, I can't say I really blame them. This is about the Hertz was hovering around 24 for quite a while, so this is certainly much lower than that. So if you're a fan of Hertz here, this could be perhaps your entry point. Senior Sebastian, any of your mentees today coming in looking at Hertz today?
We were actually talking about that one during the pit report today. It was real interesting because there was so much kind of screwy stuff with it and some really interesting, lots of trades going off in it. So I thought that was kind of interesting, just all the different pieces of the puzzle that have gone off in the last couple of kind of just really weird stuff, because they just announced that they're going to be carrying Tesla. So I would have thought the stock was going to go straight north, and then they had some weird, what was it, earnings or something that just got them crushed.
Yeah, they pre-announced their fiscal 2013 guidance for the rest of the year, and clearly not good. So and that just chopped their legs out from under them.
Mm-hmm.
Yeah, usually anything that's associated with Tesla.
Having Tesla.
You're right. Anything that's associated with Tesla, just straight north. But apparently, even that was not enough to save Hertz today. So yeah, right. Interesting trades across the board. A lot of strikes, seeing a lot of activity, as is the case in a day like today in a name like that. But some interesting narratives popping up of people actually coming in to scoop calls, not just blasting out calls and buying puts at every opportunity they could get. All right, and last up here on the old odd block, a name we talk about somewhat frequently on the old odd block. It's probably been a few months since we last checked in with our friends here at St. Jude Medical. Ticker symbol STJ, closing today at $52.81, up about 31 cents on the day today. And this is another one, does around 1,000 contracts a day, and certainly not putting up Hertz numbers, but for St. Jude Medical, doing pretty good today, doing about 5,000 contracts. It looks like a lot of that came in this one somewhat funky trade. We saw a OC 50-55 risk reversal going up for 15 cents here, about 1,500 times. But yeah, an interesting risk reversal. We'll have to dig in a little bit more. The volume here has kind of flattened things out, so both the names are trading for even about now. I'll have to see which one was over, the put or the call. But an interesting trade here nonetheless. Mr. Senor Sebastian, we talk about St. Jude on a regular basis here on the Odd Block. Have you been checking in on good old STJ of late?
No, it's really not one that I follow. I don't know about you, but as much as I love St. Jude, I love the song "Hey Jude." That's even though it's not an '80s song, but it is a song. It is definitely a song that I like. Big fan of the "Hey Jude."
Actually, looks like it went up in two pieces, 1,500 of them for that 15 cents, and then a dime debit for the rest, the 700 total, 2,200 total on the day. So we'll have to parse it a little bit more. I'll have to dig into time and sales. Don't have time here on the show to see exactly what leg went up for which. I'll leave that to be your homework for tomorrow, listeners, and see which leg was what he was doing out here, selling put, buying call, or vice versa. Obviously, that will change the tenor of the trade, appropriately, but I wanted to let you guys know about that one anyway, because St. Jude popping up all the time here on our radar. And yet again, with yet another funky spread/risk reversal going up out here. And that, of course, is all the time we have for the old odd block. And now we're going to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is, of course, the portion of the program where Alex takes the reins, and I take a little bit of a rest, but not so much today, because I think I'm going to dive in on Alex's segment as well. But first, Mr. Alex, take us behind the scenes. Give us our grand tour into the action that was going on over there at OX today.
So there were a couple themes kind of active here today, and as we talked about earlier, biotech and mobile were very, very active today. The other thing that's been going on here for a few days is hedging activity. We've seen customers come in buying puts on the Russell and the Russell ETF, and call buying out of the money VIX calls have been active on the desk, and that's a traditional hedge. Actually, during a quiet period today, I overheard a couple trades, so I need to be a little discreet about character and size, but we're starting to see some hedging activity, obviously clearly as a prelude to expectations about what we're going to see out of Washington next week. But the usual list of suspects, the Facebook, Priceline, Regeneron, Apple, Tesla, and the VIX were all busy here today in terms of the trading off the desk. But a little bit of a surprise to me to see some of the outright hedging being done. But it's clearly an expectation of what we're going to see out of Washington in October. One other thing, the marketing folks came down today and dope slapped me and asked me to remind everybody that if you are opening a new account at Options Express, the current promotion with a funded account is a $150 Amazon gift card, and it's up on the site, and that's scheduled to be there through the first quarter of 2014.
I spend far too much money on Amazon, so perhaps I can open up a second account, and maybe I'll take advantage of my cousin Frank will open up my second account here at OX.
My gold.
Can I use that on Amazon Prime?
Yeah, there you go. Use it for your membership for 2 years.
There you go.
Now, you got Mark and Uncle Mike, put on your listening ears for a second. As I told you, I was going to jump in and hijack Alex's segment for a little bit. But if you guys remember, on our last episode, we were talking about the trading patterns tool that OX just launched. And I had a chance to actually play around with it the other day doing one of our other shows. And I was pulling up some interesting data. So I'm just going to toss it out there to you guys. Alex, I'll probably remove you from this because you probably know the answer. You've been playing around with this a little bit. But if you were right now going to guess, amongst this is clearly limited to the OX clientele, so bear that in mind. But if you're going to guess, what is the number one underlying that GLD traders also trade? What would be your guess? Uncle Mike, I'll start with you. What's your guess?
GDX.
Yeah, see, that would be I'd be in that same camp as you, but I won't go any farther. Mr. Sebastian, what's your guess?
Diamonds.
It's actually SPY. That surprised me. But then it makes a certain amount of sense. But also you clearly associate a lot of these names like GLD with other metals or other types of ETFs. SLV is number two.
It makes tons of sense because the people that are out buying GLD are the people that want GLD as a part of their portfolio along with SPY. So I'll bet you there's TLTs in the top 5 of that same person's holdings.
When I pulled this, it wasn't. But number 2, SLV, no surprise there. That's kind of what you'd expect. Number 3, Uncle Mike, I think this list is made for you. Number 3, Apple. Yes, exactly. Yeah. And then number 4, the stealth Apple,
it's
Facebook.
It's a glimpse. Well, never mind. I was going to say something horrible that you'd have to edit.
Yeah, it sounds like you're describing my whole money management portfolio.
Exactly. This is the Tucson portfolio. Then you have some of the GDX and DUS and some of the other ones you might associate with the GLD. But it clearly shows the retail penetration in a name like GLD and how many of them are jumping in. Not as much in SLV. It looks like a little bit, I don't want to say more sophisticated, but a little bit maybe harder core in SLV. Really quick, Uncle Mike, what's your guess for the number one correlated underlying for SLV?
The number one correlated underlying for SLV, I will say some type of levered short stock ETF.
Are you looking it up right now?
No, I'm guessing that because of the fact that SLV is just a different mentality because they're a greater risk taker.
You are exactly right. It is the ultra short S&P 500 SDS. Well done, sir. I take my hat off to you. If you are not indeed cheating, I am very impressed.
I am not cheating. I know the mentality that I get into whenever I make a GLD trade, and I know the mentality I get into whenever I make an SLV trade, and they're both very different.
Yeah, SPY not even on this list. We have another short S&P number 5, USO number 3. You kind of make some sense there. VXX number 4. So clearly almost a different user base trading SLV
hopefully
than GLD.
That user isn't long that.
Well, yeah, the VXX, the quality of VXX notwithstanding. Predictably crappy, I believe, is your descriptive term. But, still a number 6 Facebook, then you get into some of the other ones. Apple only number 10, so a little bit different audience, it seems, for SLV than GLD, and that kind of surprised me. The degree of that.
No, that sounds good.
I went to a local seminar probably about 2 years ago, and everyone there was just talking about it. I was just some guy. He went to one of our seminars we had at the SIBO a few years back, and so he was just having some local thing for the community group or something like that. There's a lot of people there, so I just went as a guest just to check it out. And it was the most silver bullish community that I had ever seen in my life. And so I got up and talked. He was asking me some questions about it. So I said, well, yeah, I think I like silver and I like gold for the long term. And no one cared. Everyone was saying how great silver was, and it was and how the world was going to come to an end. And so just with that, combine that with some of our non-discretionary clients that we've worked with through the years, silver bugs are a different breed than gold bugs. That's for sure.
Oh yeah. Well, let's say aren't you a bit of a silver bug, my friend? Well, the thing about silver is silver, unlike gold, is a much bigger play on the economy, and has a lot more interesting uses than gold. Same thing with platinum. To be honest, there's more industrial use for platinum than there is gold. So it's interesting that so many people love gold so much when silver and platinum, I think, are much better precious metals.
So, Alex, I didn't mean to hijack your segment there. I just thought that was an interesting finding. And you listeners, of course, can do the same thing. Just if you're an OX customer, log into OX, click on the research tab, click on that trading patterns, and you can do all that same research I was just doing. Very informative. Same brokerage house, same day. You'd think on the surface, similar underlyings, attracting similar audiences, yet when you dig into it, clearly that is not the case. So, Mr. Alex, the segment is now yours again if you have anything else you need to add, sir.
I'm going to throw it back to you, but it tells you how cool a tool that is. And, I'm going to make it sound like a Valentine for OX, but one of the things about tools like that is just your point that it's not often what you expect. And there are days here when I survey the desk, or there are days here that I look at our trading activity, and our activity here at OX is much different than the activity at our parent, Schwab, because our customer is more risk-oriented, our customer is more volatility-driven, and it's interesting. If you look at the real option-centric firms, you're finding many times that they're swimming upstream from what much of the option world is doing, but that also tells you that at the option-centric firms, the customers evolved more, much more in tune with, the momentum of things that are going on. And it's a cool tool. It's one of the many cool tools here, but it's a really cool tool.
Yeah, I mean, we talk about a lot of interesting things you guys have cooking over there at OX, but I will be using this one again. So selfishly, I think that's a really, really cool tool. I'll be using it again. All right, so listeners, check it out, and while you're at it, sign up for an account and get that free $1.50 on Amazon. It's good for 2 years with the Prime. If you haven't done so yet, go crazy, go get it. And now we're going to keep on rolling right on into my favorite part of the show, the listener mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, and welcome to the mail block. And we have some, you guys keep hounding us with great questions. We love it. Keep sending them in. You can, of course, post your comments or questions on the website, on the optionsinsider.com. Just post them on the show notes when we post the show up there, and we'll, of course, find those and route them to the appropriate show. You can find us on Twitter, twitter.com/options, Facebook, facebook.com/theoptionsinsider, or the old-fashioned way, questions at theoptionsinsider.com. Just be sure to put question for the option block in the subject line so we know which show to route your question to. Going to kick things off with one of our nocturnal friends, a question from Mr. Nocturne, and I love deciphering all the lingo they use here to make everything fit into Twitter. But he writes, trying to understand out-of-the-money flies. What's a use case for an out-of-the-money fly versus a simple vertical or ratio? Very confused. Well, interesting question, Mr. Nocturne. Somewhat timely given what we were just talking about earlier with Facebook and how we're starting to see that aggressive call skew getting bid up out there. That is an opportunity for you to start thinking about perhaps some out-of-the-money flies out there. I'm not a huge out-of-the-money fly guy in general, so that's not a route I usually go. But we talked many times. The vertical is a great way to take advantage of some of those skew distortions that happen as a result of either unusual activity like we're seeing on the odd block, or just a preponderance of one-sided activity like the call buying we're seeing in Facebook. If you're a little bit more aggressive, and I'm not sure if we always counsel this, but you can always use a ratio to take advantage of that as well and sell more of the out-of-the-money, take more advantage of that. Of course, then your net short units. A lot of people aren't comfortable taking that net short risk, so that's where the out-of-the-money fly comes in. You fly off the last part, so you can still sell that on a ratio, still collect more of that distortion, but you're not having the unlimited risk factor to the upside or to the downside, however you're doing it. You have it flied off, so you have a more defined risk type trade, and that's where we see a lot of people, at least in my opinion, diving in to out-of-the-money flies. Uncle Mike, maybe we'll start with you. Then we'll toss it over to Senior Sebastian. What's your use case for an out-of-the-money fly versus a simple vertical or a ratio?
I usually don't do one. The only time I would consider one typically doesn't go. I like eking out singles and doubles on boring things. That's typically what I like, with the exception of Apple. But then with the way with which I hedge it, I make Apple boring, so to speak. So when I would use an out of the money fly is if I was trying to be bullish or bearish, obviously, on something that does have a lot of movement in it typically. And the way that I like to think about an out-of-the-money fly, let's say step one, man, I'd love to be bullish on XYZ stock, but that call is just too expensive. So I'm going to look to buy a bull call spread. Man, I'd like to be bullish on XYZ stock right now, but that bull call spread is just too expensive for me. Well, if that's the case, if the bull call spread is still too expensive for what I'm looking for, that's when I may consider turning it into an out-of-the-money butterfly. I maybe do one or two of those a year tops. When I would use an out-of-the-money fly is I may trade into one. So let's say I had a calendar spread going against me or going for me in one way, shape, or form, and I saw some type of a volatility change in what would be the short legs or the body of the butterfly. And it would also depend. I may use just a traditional iron butterfly as opposed to just the all call or all put butterfly. I may trade into one, but typically I'm not much of an out of the money fly guy.
Yeah, I really am not either. Mr. Sebastian, I know you guys like to dally in some of these every now and then. So
I really do.
What's your use case here?
For out of the money flies, I love them as kind of, I love them in high vol plays. So when stuff is just moving around too much, I love them when I'm looking for just a cheap bet. I like it in kind of really popular stocks. So I'll use flies in things like Apple and Tesla and Facebook, where it's kind of, I use it as poor man's front spread, if you will, because that's really what those out of the money flies end up being. So I use them as more of a play on just trying to guess a direction, but thinking the volatility is overpriced. That's typically when I'll use stuff like that.
Yeah, so a poor man's front spread. You're coming at it from the thought process of, for our listener, Mr. Nocturne, who's very confused. You're looking to take advantage of those distortions in like a call wing or a put wing, but you don't want that unlimited risk factor. That's just a typical front spread hanging over your head as well. That's when you'll fly it off.
That's right. Right. That's exactly right.
Mr. Alex, anything to add here to the discussion on the old out of the money fly?
No, you guys are spot on. It's just a cheap directional play, especially when you've got a volatility variance between strike prices. And unless you've got just incredibly good, robust volatility tools, those ideas are not that easy to find. But, to both your points, it's cheap. And if you've got a vol spike, especially if you've got it, between the strikes, where you've got one strike that's pumped because the trade just occurred, then the little flies are cool. But the ambition of finding them when, they're going to be there for 10 minutes or 15 minutes or 20 minutes, it's tough stuff to try to identify.
All right, we got time for one more here on the old mail block. This is a good one. I think this is going to probably outrage all three of you guys when you read it. Or maybe not outrage, but at the very least cause the hairs on the back of your neck to stand up in some sort of ire. It's a question from, just goes by Joe. He writes, I haven't been trading options for very long, so forgive me if I'm out of line. I have been listening to your show for the past 6 months, and I find it very informative. But I also wonder if many of the concepts you discuss are simply over the heads of the typical retail trader, such as gamma, vega, implied volatility, etc. I know I'm frequently confused by some of these topics. Does retail really need to know all of this stuff, or is a more straightforward approach, and he puts in parentheses, like if you sell this option, your max loss is X, your max gain is Y, you have Z days until your trade expires, etc. Is that a better way to reach the masses without scaring them or putting them off options? I hope you read my question. If you do, just to avoid embarrassment, just call me as Joe. All right, Mr. Joe, a lot to discuss here. I'll kick it off, then I'll toss it to my friends here. I can see are probably already champing at the bit to answer as well. It's a good point. This show is aimed at a little bit more active, a little bit more options familiar type audience. So a lot of the concepts we talk about hopefully won't go over all of their heads. And if they do, they are hopefully motivated to come learn more on a site like mine, or the educational tools that OX offers, or calling up someone like Uncle Mike to handle the stuff for you, or calling up a guy like Mark and have them walk you through how to do it on your own. There's a lot of different ways that you could add those tools. But I think one of the things we've been driving home with this show from day one is that yes, you really do need to know all this stuff. The approach you describe, here's your max loss, here's your max gain, that's kind of very much the way options education has been handled for the better part of the last quarter of a century, where here's your expiration graph, you put it on here, here's how it looks at expiration, go forth and prosper. And that may seem more straightforward and simpler, and to a degree it is, you're right, but it doesn't really teach you the nuances that you need to be a successful options trader over the long run. And this is very much a nuanced game. I mean, what we were just talking about before, the How the Money Flies, and the different approaches each of us have to it, and the different ways we may use them or not using, it just shows the level of nuance that is involved in this. And so you could certainly maybe fare all right at first by just that kind of basic understanding, but in order to really trade options on a more effective and longer term basis, you do need to know these concepts we're talking about, like the Greeks, like gamma, implied vol, certainly an important one. So a lot of these things that you may think are a little bit over your head, they probably are, because you're just coming to it for the first time. But stick with us a little bit. I think you'll get there. We also have a show for more beginner options traders. It's called Options Bootcamp. I encourage you to check that one out as well. It may help you sort through the weeds a little bit. All right, Mr. Sebastian, we'll start with you because this is your business. What do you say to our friend here, Joe, who really doesn't want to learn the hard stuff?
What he wants to do is buy protective puts and do covered calls, maybe. But if he actually, the idea that making money is easy using options and that you can just look at a P&L chart, that is the type of schlock pitched by fools trying to get fools to pay them to learn basically nothing. Laziness is not a way to make money, and people that don't learn the fundamentals, that don't take the time to really figure this game out, they may make money for 6 months, 9 months, a year, and then they will eventually have to pay the piper, and their cost of education will be extreme, to say the least. So can you do it without learning the Greeks and all that? Not if you want to be an option trader. If you want to use options to trade direction in stocks or something like that, even then I would still push you toward learning vol and vega and gamma, but maybe something there. But if you actually want to be an option trader, yes, you have to know all this stuff. Sorry. Not fun, but it's the rules.
No quick road to profits, despite what the infomercial might promise you. Alex, Uncle Mike, anything to add to this one?
Yeah, let me chime in. Some of the most successful traders I ever met could not calculate the Greeks or understand the Greeks. Also, some of the most successful traders I ever met were true rocket scientists. So I think the answer is somewhere in the middle. And I do think there are times the industry does make it more complicated than it needs to be. But does it hurt you to have a depth of knowledge? Of course not. And one of the greatest quotes I ever heard was from a guy by the name of Fisher Black, who said, the option model is not for pricing options. And he paused, and he said, the marketplace prices options. The model is for discovering the Greeks. And to his point, this is as close to a verbatim quote as I can do. The Greeks help you establish expectations about how your trade is going to do, what strike price you might want to select, and for you to have a good expectation of what your option is going to do after you buy it. I think this industry does sometimes overplay Delta speak, and that's throwing the Greeks around. Can you be a successful trader without the Greeks? I know people who've made hundreds of millions of dollars without the Greeks. I also know people who've made hundreds of millions of dollars and can calculate the Greeks in their head, which just amazes me. It's really a question of what your style of trading is. And, I've talked about this on the show before. Two of the most successful traders I knew, people who returned enormous rates of return. One's name I could say because he's been in the press. That was John Jacobson at Harvard, no relation, who was a put seller who had a very simple strategy. The other one was a leap buyer, and I've talked about her before. She was a leaps put and call buyer who was a fundamental stock picker, not good at market timing, not good at the Greeks, didn't want to hear about them, but fundamentally she could identify good companies, good sectors, good trends, bad companies, bad sectors, bad trends. And, their rates of return in both cases were on their capital approaching triple digits. And sometimes when the John Jacobson story is told, he was the put seller. He came through October '87 and made money being a put seller. But the key to being successful, if you look at the successful names, the Blair Halls, the Tony Salibas, the John Najarians, they all had an intuitive working knowledge of how the options would move, how things would look going forward if this happened. And I think the Greeks are important to helping establish expectations. If you've got fabulous technology and you can look at all the strikes and all the expirations and all the skew, is that technology going to make you a better trader? A little bit. There are boxes that can do that now. There are machines that can do that now. You still got to be intuitive about what you're doing.
Uncle Mike, anything to add to that?
One quick point. I totally agree with it. I think both guys summed it up pretty good with that. You have to be, no matter what you do, your intelligence isn't necessarily going to make you a better trader or a worse trader. Quick real-life example, I coach my son's flag football team. I'm the head coach and the offensive coordinator. And so last week, I saw this play. It was wide open. We ran it. I had the defense beat. By gosh, I was smart. It was a short, high-percentage pass, and the kid dropped the ball. Now, my assistant coach was very upset with me, and rightfully so, because even though I read the defense perfect, I had a great play call. Problem was that we had the lead, and there was 45 seconds to go. The other team didn't have any timeouts, and we were on our own 5-yard line. That made it a very stupid play call. So, with that in mind, the same can hold true in the option trading world. By the way, we did go on to win the game, thankfully. In the option trading world, one thing that Alex, I've heard him say, I don't know how many times, you can be right on volatility and wrong on direction and still be right, but you can be wrong on, and the opposite is true as well. So with that, I think that there's a lot to it, but to add to Alex's point, more knowledge is not going to hurt you, folks. And if you're not going to understand the Greeks, then you better keep it simple and be good with picking directions. For the people that bought calls and Apple on the way up, on its way up to 700, they did pretty well, very likely.
Indeed. All right, great questions, everybody. And if you want to join your fellow listeners, like I said, let us know over there at theoptionsinsider.com or on Twitter or on Facebook or at questions@theoptionsinsider.com. And since we kind of went long on that question, I kind of figured we might. Not much time really for around the block, but of course I think all of us are all really only looking at the debate and the potential shutdown or potential deadline looming on the 1st and what's going to happen on that. So I think we're all going to having a very, very careful eye on that. Everything else like earnings and other things coming down the road going to take very much a back seat to that. So with that, I think I'm going to check in with my cohorts here, my partners in crime, to see what they have cooking in their necks of the woods that may interest you, the listeners, while you're waiting for our next episode. Start off with you, Uncle Mike Tusaw. What is cooking in the land of RCM Asset Management?
All right. Well, we are excited this week on the webinar train. We have Dan Cook from Nadex. He is going to come on the night of October 3rd, talk to us about those binary options that we hear so much about, and we're excited to have him, folks. So tune on in and learn and listen to Dan.
And if you like that webinar, when you're done listening to Dan there, you can surf on over to our new show, the Futures Options Roundtable. Nadex is a big part of that show, and Dan is on that one. We've got a lot of great shows in the can. The first one's already out, more to come. So check out Uncle Mike's webinar. If you like that, then surf on over to the Futures Options Roundtable and check out that one as well. All right, and Mr. Sebastian, what is cooking in the land of the pit?
Well, a couple of things. I have, obviously, this will be your last chance to sign up for the VIX class that I'm teaching on Saturday. I'm finishing up those slides right now. They look awesome. And then I will be speaking at the All Stars of Option Trading Conference from Thursday through Saturday at McCormick Place in Chicago. And it should be a good time. And I think a little bird told me there'll be a thick-necked, goateed young man that will also I may run into there.
Yes, I may be making a stealth appearance. I'm not publicizing it at all, but they have conned me yet again into swinging by. I think I'm talking about I think collars actually. I'll remember on the day what I'm talking about. I assure you, listeners. So if you are going to come by,
ironic.
Oh, good.
That they're having you talk about collars.
Well, I was a priest in my former life before I dove onto the trading floor. So there we go.
Okay. Well, I would think they'd have you talk about turtlenecks instead of collars.
Well, I do like a fancy Steve Jobs looks every now and then as well.
Exactly.
All right,
Proof
Mr.
that trading can make a preacher swear and a sinner pray. Anyway.
All right, Mr. Alex, what is cooking in the land of OX?
Just showcase a couple of events. Monday the 30th, Intro to Short Calls webinar, and then a real full calendar on Tuesday the 1st. Dan Gramser from the CME on pivot point trading. Jim Wyckoff from the Wyckoff Letter doing his monthly futures outlook. And then after the close, I'm doing a hub webinar. I got to tell you, the last two hub webinars have been full of listeners of the Insider. It's really interesting because when we do the webinars, you get this little chat box and you'll get all these little comments that people will put up and say, I don't have an account, but I've listened to the Insider. And then after we show them the hub, they go, this is really cool. So the ability for you to be incognito at the All-Stars mark, I think is going to be impaired. You're going to have to shave and pull the hat down over your eyes.
I'll try. Like I said, I'm not beating the drum for this one at all. I'm just going to go in and meet some great people, hopefully, and chat a little bit about collars and see what people have, what questions they have for this kind of stuff. I'm always fascinated to hear what people have to say in person that are motivated to go to an event like this. And it certainly seems like they have a great lineup. So if you are going to be in Chicago, go on there, check out Mr. Sebastian, and then maybe swing by and I'll say hello to you later on as well. And on behalf of Alex and Mike and Mark and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.